Welcome to Acumen Accounting, the Budget Review. I'm Lorraine Harmon and I have with me today our budget expert Cameron Stevenson.
Thank you.
The COVID-19 pandemic has forced businesses to restructure their affairs and adapt to the new business environment. Governments too have the opportunity to implement wide-ranging and long overdue reforms around taxation and funding of services such as health, education and childcare, or undertake significant infrastructure development to change the productive landscape of our country. Instead, this budget has relied heavily on handing out incremental changes to as many people and parts of the economy as possible, in the hope that we will generate more jobs to pay back the debt. Cameron, we've been hearing all these words about jobs, and how important that is to stimulate our economy. Is it going to work?
Well, Lorraine, that's the $1 million question, or in the case of Australia's net debt, it's more the $1 trillion question. We've already got job seeker and job keeper, but we'll soon have job trainer and job maker, just in case we've forgotten that it's all about jobs. So job trainer will provide funding for 50% of the wages of new trainees or new apprentices hired from the 5th of October, and that'll run through to 30 September next year, and that's capped at $7,000 per employee per quarter. Job Maker, on the other hand, that will actually pay for hiring new staff, and it's targeted at the young unemployed. So people who are 16 to 29, employers will be able to get $200 per week as a cash offset towards their wages, or for those that are aged 30 to 35, they're eligible for $100 per week. So to be eligible as an eligible employee, they have to be in those age ranges, and they also had to have received sometime in the past 3 months either a payment from job seeker, youth allowance, or the parenting payment.
There is also a number of personal income tax cuts that has been handed out in the budget. What are these, Cameron?
Yes, so these were pretty well leaked before the actual budget night, but essentially the government is bringing forward stage 2 of their income tax plan. So basically, without going into the detail of what rates are changing and all that sort of thing, people earning between $45,000 and $90,000 a year are going to end up with about $20 extra per week in their pay, and those earning $120,000 or more will end up with about $46 per week in their pay. Importantly, for this financial year, they're also keeping the low and middle income earner tax offset, which will give people a further $1,080 when they do their tax return for the 2020-21 financial year.
Oh, that's the same one that they've received the last 2 years.
That's right.
Okay. So Cameron, apart from the job maker, what else is in this budget for business?
So the other big announcement for business was the changes to the instant asset write-off rules. So previously that had been extended to, started off at the $20,000 limit and then went to $30,000, and at the start of the coronavirus pandemic that was increased to $150,000. So businesses previously with a turnover up to $50 million per year could immediately deduct the purchase of any equipment that they purchased up to $150,000. So now under the new rules, anyone with a turnover up to $5 billion can qualify. So the Treasurer said that will incorporate 99% of the businesses in Australia. So majority of businesses will be eligible for the scheme, and there's no cap on the amount that they spend. So if a business needs to invest $10 million in a new piece of equipment, they can immediately write that off in the current year. One of the important things though with that test is it has to be new plant or equipment. It cannot be second hand, except for those original businesses that previously had the immediate write-off rules. So those that are under $50 million, they can continue to purchase either new or second hand equipment and immediately write it off. And then there's a small window there for businesses turning over $50 to $500 million that they can purchase something second hand up to the 31st of December this year and install it by 30 June next year and still claim it.
So we're talking about those changes to be for large business to extend past 30th of December or up to 30th of December?
So the businesses right up to $5 billion, that will be in place through to 30 June 2022. But the rules around the second-hand equipment for those businesses under 500 million, that has to be done by 31st of December this year.
Okay. Cameron, do you believe that this is going to have business going out and buying new equipment to improve their business?
Look, Lorraine, certainly some clients will be out there saying, well, this is a great opportunity, I need to reinvest in my ageing plant and equipment, and what better way to do it to get some increased depreciation. But we do need to remember it is really just a bit of a sugar hit in that initial year when you get the big depreciation, because then of course you don't have any deductions for that equipment going forward into future years. And the other thing is, for businesses who are already using the depreciation pools, the budget papers would suggest that those clients are able to fully deduct the remaining balances in those pools. So some clients might have, $500,000, $1 million worth of written down value plant equipment that they'll be writing off in one big lump sum, which will be great in that first year, but then there'll be no depreciation going forward. The other thing, of course, is that to benefit from those accelerated deductions, you need to have some income to offset it against. However, in this budget, they have made a temporary ability for companies, so businesses that are structured as a company, to offset losses that they make in the 2020 through to 2022 year. They can offset those losses against profits that they made in the 2019 year or future years, to the extent that they paid tax. So if you have paid $30,000 of tax in the 2019 year and you incur a $100,000 loss in the 2020 year, then you might be able to claim that $30,000 back to offset. So that might help stimulate some businesses to make that decision to purchase equipment.
So what you're saying is they're actually going to get their tax back. So they'll get a refund for what they paid for the prior year?
That's right, yeah. Okay. Assuming that the loss that they incur in those future years fully offsets the profits that they paid tax on before.
So just generally, do you think, I mean, it's really hard to add that crystal ball, but how much stimulus do you think will come from this budget?
Hard to tell. I guess it all depends on how many businesses go out and decide to invest in new plant and equipment. Also, how many businesses decide to take on new staff as a result of the funding there. Clearly, the government is focusing on getting that unemployment level down, so that'll be the key driver.